What's happening, traders? What's good? In this video, my job is to make ICT concept ridiculously simple for you to learn. But before we do that, I want you to scroll down to this video, click that like button, and subscribe to this YouTube channel. Alright, so let's take 3 seconds to do that together. 1, 2, 3. Bam! Alright, let's get into the video. You didn't smash the like button, right? Come on, man. So if you can't smash the like button, maybe after this video, when you've gotten tons of value from this video, if you learn one thing, just one thing from this video, then you have to promise me that you're gonna like this video. Alright, so let's roll up the intro. Welcome back to yet another mind-blowing video. It's Oromak out here. In today's lesson, we'll be talking about how we can trade NFP and how we can make money out of NFP. You get me? Alright guys, so we are looking at the daily time frame on gold, and as you know, the higher time frame, like the daily, the weekly time frame, is used to understand the directional bias of the market. You get me? And directional bias is simply where you expect the market to go to. You get me? Now, this is the daily time frame, and this candlestick here, this one here, the last bullish candlestick that closed bullish, that was Friday, and that was NFP. You get me? So I want to explain everything that happened on Friday, right? I actually sold NFP, although the setup I'm about to share with you here formed on the bullish side of the market that made price close bullish. You get me? So I'm still going to share you the reasons why I sold, and I'm still going to share the bullish setup that formed, although I didn't take the bullish setup. You get me? Now I have a strategy that I use in trading the news. Now this strategy is called the 829 strategy. It's just a new strategy that I've coined out to trade the news, and the strategy is all embedded in time and price. You're only allowed to trade this strategy on that specific time. The 829 strategy, just as the name implies, simply means opening a trade 8:29 before the 8:30 New York time. Remember, I'm always using New York for my time, so if you hear me saying 8:30, you just have to add to your Nigerian time 5 hours to that to give you your main time. So Nigerian time is basically 1:30, so it's basically, let me just say, the 1:29 strategy, but here I'm using the 8:29 strategy. You get me? So it's simply you opening a trade, either buy or sell, 8:29 or 1:29 as the case may be, before the news happens, 8:30 or 1:30. We all know that the NFP news usually comes in 8:30, FOMC 8:30, CPI 8:30, and other news, they come in 8:30 New York time, which is 1:30 Nigerian time. So the strategy is opening your trades 8:29 before the 8:30 news. Now just 1 minute before the news, and you make your decision. In this video, I'm going to walk you through how you can do that. But first, before the entry strategy, before you even start thinking about the strategy, the first thing you have to think about is, where is the market most likely gonna draw to? Where is the directional bias for this pair? That is the question you need to ask yourself. You get me? That's the first thing. The first thing you ask yourself whenever you wake up is, am I going to be buying gold today, or I'm going to be selling gold today? So you answer that question by doing your proper analysis on the higher time frame, right? Once you have decided that you're going to either buy and you're going to either sell, you stick to what you said. You don't have to go and start changing randomly because you saw another trader on Twitter saying he's going to sell when you said you were going to buy, and you now change to sell. No, you stick to your directional bias. So this is the first thing you need to understand. So now looking at gold here, obviously, let's say we took out this candlestick here, this wasn't here. Now where I wanted price to draw to was basically here. It's obvious. Price navigates towards areas of liquidity and fair value gap. So I wanted price to grab this level here. Below there will be stop loss orders of people buying, so there is a whole lot of liquidity lying below that level. There are stop loss orders of people buying, and there are sell stops orders of people that are trying to short the market. You get me? Now I wanted price to navigate towards this place and grab that liquidity. So that's the only information I picked out on the daily time frame, and also I had this fair value gap on the daily time frame. Don't worry, I'm going to zoom in for you to see, but I'm just going to show you the broader picture first. This daily fair value gap was here. I wanted to see NFP drive price down, grab this liquidity, and then rally back up into this fair value gap and close there. With the benefit of hindsight, you can see that it didn't literally grab this low, but I'm going to show you something that is most significant on the lower time frame. NFP last Friday, price sold before buying. I'm going to show you how I caught the sell and how the buy formed after the news. You get me? Now, this is the zoomed in chart of the daily time frame. This is the liquidity that I marked out from that low, and this is the fair value gap from the daily time frame. Now, before NFP, I want you to understand price was basically here around this area bearish before getting in here. So let me just give you a sneak peek into what happened. Price drove lower before going higher. NFP helped took price lower first, right? The idea was to take price first down and then take it up. You understand me? So before the NFP, I had read that price is going to come lower before going up. That was the idea that I had on the daily time frame. So we will be jumping into the 4-hour time frame so I can show you the reasons to why I was expecting price to sell first before going higher. All right, so this is the 4-hour time frame on gold, and this was the NFP candle on gold. You get me? So the reason why I wanted to sell gold first to grab this liquidity before price moves up into the daily fair value gap was because of this simple stuff that I'm about to show you right now. Price was basically inside a 4-hour fair value gap. So on the higher time frame, price had created this gap in here on the 4-hour time frame, and then price tapped into there. And where do you expect the next point of liquidity to be? So obviously this high is what created this low here. So let's forget about this daily liquidity for a minute. Let's focus on price range right now. So this high here, this was the low that formed this high, right? So I also marked that out, and as you may have it, that low there was previous day low, exactly where you would want the ICT setup to form. This was previous day low, and this was the high that created that low. So currently price created that low and started trading back up. So after price created the low and started trading back up, obviously you can see that price grabbed liquidity here before rallying back up into the fair value gap, then going back down to grab liquidity again. This is just trying to tell you that price moves from liquidity to fair value gap, from fair value gap to liquidity, from fair value gap to fair value gap, from liquidity to liquidity. See, once you can wrap your head around this thing, it's just that simple. You can see that price grabbed liquidity here, right? So after grabbing liquidity, the next place I wanted to see price rally into was this fair value gap that it created on this price leg. So after price tapping into the fair value gap, I wanted to see price do what again? I wanted to see price come down to grab sell side liquidity and probably tag this daily liquidity for us. So we were in here during NFP. Now you can see that price on its own has aligned. So we only have to wait for time to align. So remember, the strategy is built on time and price using ICT's logic. Crafting out a strategy doesn't really mean I have to use ICT's strategy. What I do is I use ICT's logic, I use his teachings. His teachings act as a reference point to my strategy. Do you understand me? It's just like the university. When your lecturers is teaching you in the university, they are teaching you with reference points, with books written by other people, and they use that to explain that concept to you better. So it's the same thing on this channel, man. So I'm not trying to change ICT's concept. I'm not trying to say I'm the one that invented it. No, ICT's concept is basically a reference point to my strategy. It's basically a building block. You get me? It's basically the foundation to my strategies. I've been privileged to study private courses of ICT. I've been privileged to gain access to his private materials and both his free materials. So putting that together, I took out the simplest concept and I built it for myself. Do you understand me? I didn't build it to come and start selling to people. No, I built it for myself. So why I'm sharing it out here on YouTube for free is because I've tried it and it worked for me. It's as simple as that. So if it worked for me, I know that there are thousands of people like me out there. They are going to resonate with the strategy. Do you understand me? So enough of all the yarns. Let's stay focused. So price moved into the fair value gap, right? This was where price was. Price started dropping from this fair value gap even before the news. Do you understand me? So I'm going to show you that on the lower time frame. All right, so let's scale lower to the 5-minute time frame where my entry was taken right before the news. Alright guys, so this is the 5-minute time frame, and I'm going to show you the sell that I took right before the news. Alright, so remember, this is the fair value gap, this 4-hour fair value gap. So I'm going to mark Friday so I can understand what happened on Friday. So here, marking that out. So Friday began here, and price traded into that fair value gap on Friday. Price was literally in that fair value gap coming into Friday, and then dropped lower, but went back up during London session, and then tapped into that fair value gap, right? So during New York session, which is when I trade, this is my Q zone. During New York session, I started hunting for opportunities in the market. So price tapped into this fair value gap on the 4-hour time frame. So now this is the hack in trading NFP, CPI, any news. Before the news, observe where price is on the higher time frame, like 1 hour or 4 hours. Right? Most especially 1 hour. Observe where price is before that news. So few minutes before that news, price was inside a 4-hour fair value gap on gold here. So price had moved from that 4-hour fair value gap and then started dropping. Now that is the only information I need. That is the only thing I need to understand where price is going to. See, you can literally predict your news using the technicals on your chart. Reasons why we are not able to trade the news is because we don't understand the real things that move the market. Once you understand this, you can understand the direction of the news. You get me? So I saw price moving from this 4-hour fair value gap. So that is price. So I'm just going to allow time to align. So let's zoom in into this price action. Let's try to analyze this price action. Let me show you what gave me confidence that price is going to go lower to grab previous day lower. So let's zoom into this. Alright guys, so this is the zoomed in picture, and as you can see, once price tapped into the fair value gap, what did I notice that gave me confidence that NFP is going to be a sell into that liquidity? Price started respecting bearish PD arrays. Price respected this fair value gap here. Price started creating and respecting bearish PD arrays. You can see that price respected this fair value gap also. You can see that there is a tiny fair value gap here and price respected it. Price respected this. Price came, tapped into this other block here. This is an order block. Price tapped in here. Now, the strategy is 8.29, right? You need to wait for 8.29 before you take your trade. But on Friday, I actually entered before 8.29 because I saw something significant. So I entered before the news. Price broke here and then came back to this other block here. An order block is not just one candle. An order block is basically a change of delivery. You can see that it changed from bullish price to bearish price. If you go on the higher time frame, this is just one candle. So on the lower time frame here, it's a consecutive bullish close candle. So I took a sell here and I waited for price. So the 8.29 is simply this. Once price is 8.29 into the news, so around somewhere here, if you go on the 1 minute time frame, the 8.29 candle, you open a sell order and you put your stop loss above the nearest structure. So this strategy only works if price is going to go one direction first. The first direction that price goes to, even if it's the wrong direction, will obviously align to your entry if you've done all these things that I've been doing. You can see that the bearish move was basically the fake move before the bullish move, but I still made money because I sold with logic. I sold to actually see price grab previous day low and to actually see price grab this daily low here. So the 8.29 strategy is just after doing due diligence, 8.29 into the news, you open your position and you put your stop loss here. It's the same thing. It's the same thing with CPI. I've done the same thing with CPI. I've done the same thing with FOMC. 8.29, just before the 8:30 New York Times news, I launched a trade. Do you understand? So that's just how it is. So after price sold and I took my profit on previous day low, remember, there is always a setup after the news. So let's move into the 15-minute time frame to confirm this. So this is the 15-minute time frame, and as you can see, once price sold and I took my profit here and then reversed from here. Now you might be asking yourself, how do I know where price is going to reverse? Now it's simple. Price reverse, immediately liquidity has been grabbed. So if you understand that price moves from liquidity to liquidity, you should always expect price to reverse after liquidity has been grabbed. Another example, you see price was going up here. So before price goes down in any form, it has to tap into some sort of fair value gap or grab liquidity. In this case, price grabbed liquidity in here, right? Which was even one of the reasons why I was confident in taking the sell trade, because there was a liquidity resting inside a fair value gap. Remember my last video, I talked about liquidities that is rested inside a higher time frame fair value gap. That would be a high probability fair value gap to take your trade from. Price only reversed after liquidity has been grabbed, trust me. So price came here, grabbed liquidity, and then returned. So I had my TP here, right? Price reversed. If you look into the left, this is basically previous day low, right? So if I'm to mark this out, this is Thursday, right? And this is Friday. So the lowest point of Thursday, right? Price grabbed that. Immediately after grabbing the previous day low, it rallied higher. And it's not a coincidence that this is the exact level that our setup usually forms. You get me? So immediately after the news, there is always a setup for you. price grabbed here. That is the first thing in the setup, and then the second thing is rallying higher to break market structure. So this rallied higher with displacement candle, and this broke market structure here. Now if you want to understand how to know a valid break of market structure, I will have a video on the description box that link how you can understand a valid break of market structure. So I'm not going to go into details why this was a valid break of market structure, but the hints that I can give to you is that price broke a high that tapped into a fair value gap. So moving forward, price violated that high. When you go down to search that price range, the leg that broke market structure, you want to see a fair value gap, and as you can see, there was a fair value gap here, you get me, and this was the fair value gap after the news. And the fair value gap was not just a random fair value gap, it was a fair value gap that grabbed previous day liquidity. So after that, that is where you would have bought, and then buying, where do you expect to take your profit? The daily fair value gap. This was that daily fair value gap that I marked out. So price, upon getting to the daily fair value gap, you see the resistance here, because price has literally tapped into that daily fair value gap. You understand me? So this is just the trade. If you couldn't enter here, this is another point you would have taken your trade. This is another gap. So far price has not yet reached the target. Every gap on the way up is valid. It's simple. So far price has not yet tapped into this. Every gap on the way up is valid. So this would have been the entry, this would have been re-entry, and then target, and then boom, you close your trade for the day. The stop loss below structure here, and then your target here, and that's easy peasy. Forex trading, ICT concept, to me, and what I want for also you, shouldn't be complex. You understand me? So that is my job, to make sure I simplify this whole ICT concept to you. If you are struggling with understanding ICT concept, and you have someone you introduce into ICT concept and is telling you that ICT concept is difficult, please don't hesitate to share the update, to share my channel with such person. Get that person amazed on how simple ICT concept is. You get me? So this was the 2 trade setup. You can see 2 trade setup in one trading session. Crazy, just by understanding and building sound logic to these candlesticks here. Nothing else. This candlestick is doing nothing else other than tell you a story, and that was the story I was able to craft out on Friday during NFP. So if you picked out something and you didn't smash the like button along the way or the beginning of this video, do well to smash that like button now. You understand me? So that I can be bringing these videos your way, and also so that the algorithm will take this channel to other traders as well. Also, if you want to reach out on Telegram, if you want to chat me privately on Telegram, the link is in the description box. I don't give out courses again. Till further notice, every information, every knowledge that I'm having is going to be free here on YouTube. The only services that I'm offering is a one-on-one session, right? I'm just going to explain this concept in a deeper dimension with you in a one-on-one class. You understand me? Where I get to trade with you, gist with you, talk with you, and we'll just grow together in this game of Forex. So if you want to book a one-on-one session with me, check the link in the description box below for my Telegram link. And this is one thing I found out. YouTube literally told me that I have a whole bunch of people watching my videos that don't subscribe to the channel. Come on, man. The best you can do for me while I'm here doing my best for you by bringing in these videos is for you to subscribe to the channel. So do well to subscribe to the channel. Until I catch you guys next time, peace out.